Yes, the expectations were relatively low, and the communique really didn't give much of the points that the market was hoping for. So there wasn't much talk of more support for private sector enterprises, or for embracing more market economy, or for stimulating consumer demand. So these are some of the problems that will have to be resolved if the Chinese economy needs to hit the 5% mark for this year, because it was really slow. Second quarter is slowed down to 4.7% GDP growth. And certain areas were very worrisome. The consumer consumption was only about 2%, which is way below where it needs to be, whereas production was high, it was 5.4% in the second quarter. This is kind of a reflection of what was also communicated in the communique. It was much more about supply side, what the modernization of manufacturing was going to happen in China, whether it's in EVs or solar panels or batteries or semiconductors, but it didn't talk much about stimulating consumer demand. So as a result, what you end up doing is maybe you're producing a little bit too much, actually, and you need to export these products overseas. And then you're a little bit at the mercy of the U.S. and Europe if tariffs get put on these products. And then the export numbers will be impacted accordingly.
So, George, what does the expectations versus what they've delivered in this communique tell us about, A, where the markets are at, and B, where the leadership is at?
Well, it tells us that the leadership and the party and the government is much more worried about stability, focused on stability, high quality growth rather than a high rate of growth. So, for example, they're much more concerned about being independent on their own semiconductor production and making sure that they're getting advanced in their technology improvements without relying on other areas like the U.S. actually, because obviously the U.S. is starting to limit the amount of high-tech exports to China. So they want to be a bit more independent so that it's more sustainable for the long run as opposed to a short-term growth spurt.
Right.
And also what it tells us is that they're not going to...
George,
and I think it also tells us that they're not going to do what the U.S. did. They're not going to lower rates right away just to stimulate the economy for the short term. If anything, they're almost a little bit pegged. They're almost pegging the renminbi a bit to the dollar. I think they're going to wait till the Fed maybe moves in September to lower rates before the PBOC then lowers rates by about 10 basis points and then maybe lowers the triple R by about 25 basis points at that point. But they're willing to wait until the Fed moves first, actually.